Let's welcome our market master for the day, Sanjay Dutt, Director, Quantum Securities. Sanjay, you've joined us on several crucial occasions. 1 year and 1 month back, you were with us end August, wasn't it? August 29th or 30th, when the markets touched 5188 intraday basis, below 5,200. You were with us and you said buy, buy, buy. And look where we are. Today, I'm asking you for a trader. We have shied away from the 8150 mark. We are on the throes of a possible change in the FOMC language. Should a trader take profit? Have we seen the best for the year on the Nifty?
Absolutely, Lata, and for the trader I would say that sell every bounce, and in fact even sell now, because I think the risk reward in terms of price and fundamentals is very unfavorable at this point of time. Market is a tad overstretched, even at least in the short term. All the positives are broadly priced in, and more than anything else, the global landscape, the global canvas is not looking too clear to me. So that's the reason I'm confused, and I would prefer being, out of the market, or maybe even have, even maybe reasonably short, because, the Eurozone is trading problems. US is towards the top of the range. And of course, you correctly mentioned that, interest rates in the US and a lot of other issues coming out from there. I think Europe is a real problem that's looking to me. So obviously this is going to reflect into the currency equation in India. We've already seen RBI being aggressive and doing a lot of sales to manage the rupee. It's that landscape that's going to probably have a substantial effect and add dark clouds to the equity markets.
Okay, by the way, just to move those dark clouds away for a tad bit, there's some more positive news coming in from Brent crude. It's now sitting at $96.2 a barrel, so it's a fresh 26-month low that Brent crude has hit, and that of course in the longer term will be a big benefit for Indian markets. But Sanjay, hi, good morning. So you did mention that traders should use every bounce to sell into the market, but what about a long-term investor who has entered relatively late into this rally, hoping that this will be a multi-year bull run? What does he do now?
I think there's no doubt about that, and it would be a multi-year bull run. But Lata obviously asked me from a trader's perspective, a very short-term perspective. And from a investor's perspective, India is the story. India is the place to be. There's no second thought about that. Whether it's the crude prices, whether it's the resounding mandate, political mandate in place, whether it's policy action in terms of what's cooking and it's ready to come out of Delhi. I think those things are all positive, and obviously the biggest positive, as you just mentioned, is crude come off substantially. But I just hope the dollar-rupee equation and the dollar and the rupee and the currency basket equation doesn't spoil that. And I think the crude basket at this point of time is probably at a multi-year low as far as India is concerned. So these are very positive developments on the other side, and there couldn't be a better time for government to land up doing fuel price decontrol. So those are major positives for India. Subsidies, current account deficit, everything has a real positive impact because of all these things. Okay. From a standpoint of an investor that you asked me, who just entered late to the, I hate to use that term, late to the party, but who's entered late in the markets, but it's still a good time to just remain invested, look for opportunities, add on panic days, add on down days, let the market correct. Don't be in a hurry to jump in, but yes, definitely add and look for individual opportunities to invest into.
Fair point. Sanjay, just a word more on how you're gauging the globe. Bad news from Europe would normally mean that they are going to be in stimulus mode, and that's what Draghi indicated when he last spoke at the ECB meet. As well, it's quite possible that the US will only speak about, maybe mild noises about returning to rate hikes, but may not do much anytime soon. My point is that global central banks are still ready to pump in a lot of liquidity, especially in Japan and in Europe. So are our cuts going to get very deep at all?
See, our cuts, we probably might be one of the only countries in the world in the next 6 to 9 months who would start, reasonably aggressive. Of course, it sounds like an oxymoron, but a reasonably aggressive rate cut cycle. The reason being that we got to get growth kick-started aggressively because growth is still very flip-flop. And obviously you can't rely on the data that comes out on a month-to-month basis, but you got to see over a longer period of time. I think growth is going to be an issue for India, so therefore that has to be kick-started. The investment cycle has to be kick-started aggressively. Bank balance sheets have to be set right. And in addition to that, I think the major positive that's going to happen is inflation, both core as well as food. Both are going to ease off substantially, as we've seen in terms of vegetables, in terms of other product prices. In fact, edible prices have come off, and this is one of the very few periods where we have the lowest possible MSP increase over the last few months. So these kind of things are making it very positive from a medium term. Coming to your question, sorry for being a little long-winded, but coming to your question on the Eurozone, I think yes, Eurozone and central bankers' coordinated action, is going to be much more than what we've seen earlier in the early 2000s. And in fact, post the Lehman crisis, central bankers have become very cautious across the world on coordinated action. So therefore, Europe and Japan are going to lend support to the main street across the world because they know it's not suddenly easy to really, back off if US is tightening and they also go on a hold mode. So that's going to provide a support to most of the growing markets like India. But I think the short term, like I said, the short term landscape is a little confusing till all funds and the global money starts to adjust as to what's going to happen in the US. Because ultimately, US is a place where global money is parked and looks to, and even if it's not parked there, it looks for lead indicators out of that place. So that's what is causing the short term confusion.
Right. I think traders are taking your cue, Sanjay, because the market has slipped further. Now it's down almost 1%, so 70 points gone straight up on the Nifty and more than 220 points gone on the Sensex. This is the lowest point of trade, so just watch out for the screen at this point. A lot of blue chips like HDFC, L&T, SBI are actually contributing to the pressure this morning. But we have a query that's posted on our Money Control message board, so I'm going to toss that to you, Sanjay. Gopal Das has written to us from Chennai, and he wants to know if it's a good time to enter ONGC, and he also wanted your thoughts on the future prospects of the stock. Given the fact that Brent crude has slipped so much, do you think despite the run-up we've seen, ONGC is a good bet?
My advice to Gopalji would be that, it's a secular bet in the sense that ONGC and most of the oil exploration and marketing companies are going to do really well in the next few years. I can't really game it if it's a good time to buy right now because, if in this downdraft, the fact that it's run up quite a bit, it'll correct. But if he's got it, which I understand he has, he should hold on to it. And I obviously understand that he's an investor and not a short-term trader. And if he gets extreme corrections in it, which I mean about 5–10% or even more, then probably if he has surpluses or if he wants to switch from somewhere, he could buy some more, I think. So, but in this space, of course, if he wants to buy anything else, I think on a correction on this downdraft, Reliance would be the best positioned stock to be in this sector.
All right. I was coming to the gas price issue, but you've answered about Reliance. Sanjay, PSU banks, again, let me recall 1 year and 1 month ago, you told us PSU banks would be the best bet. And I think if you take a 1 year performance, PSU banks, I think, are absolutely the most eye-popping performance. From those bleak days of 1 year ago, August of 2013, when you had those extraordinary money market rates. How would you look at the PSU space? Are there any specific stocks you want to point out or as investment buys, and which would be landmines to avoid?
On a lighter note, I think Lata first, you're giving me too many compliments, so I'm feeling uncomfortable. And my next would be that when I go to have a cup of coffee with me.
Okay.
So, but I've had some real bad calls. I've been through rough weather, so it's not that everything that I've said from a longer medium-term point of view that it's come out right. Okay, now coming back to the serious question. Now, I think the banking space continues to excite me. PSU banks continue to look very good because what I like the best about this space is that, the current RBI governor and the current government has taken the problem that we all know, we always knew in the street and, people like you who are pros in this sector, the underlying problem that there was, the muck that was there in terms of NPAs, corporate problems, corporate balance sheets, are now being taken head on, and solutions are being sought, actions are being taken, some extreme actions were also taken in terms of, threats to corporates and threats to PSU bank chairmen. So once you had understood the problem and you're aggressively addressing it, that's the time when, a sector or industry really turns around. And I think it's got a long way to go. The PSU rally is here to stay. Bank balance sheets will be set right. Added to that, growth and everything else picking up, interest rate cycle turning. I think there is a lot of potential in the banking sector.
Okay. So if you had to, I know it's very hard to do it at this stage, Sanjay, but if you had to quantify the downtick for the market, what do you think the extent could be? Will it just be restricted to 5 to 10%, or are we looking at a graver correction in the next 3 to 6 months?
Sonia, I don't think it will even be 10% because, a lot of money is on the sidelines, both within India and overseas. And like I said, if I'm optimistic and if I'm bullish, which quite a few people on the street are, on the banking sector, on oil and gas, and if you break down the index components, if oil and gas, banking, etc., start to give support and interest rate cycle starts to turn and our expectations start to look good in the short term, inflation starts to ease off, then I don't see a correction beyond, say, 5% from the current levels, I think, from an index standpoint. Of course, internally, a lot of froth, a lot of stocks which have just run up would correct. But purely from a Nifty, level, I don't see anything below 7,700, I don't think so, no. 77, 7,800, because if I just break down the index and I look at oil and gas, and if I look at banking and I look at some of the other, consumer goods sectors which have positive impact in terms of inflation, then I don't see an index below 77, 7,800.
Okay. Sanjay, would you expect the cut in the mid-cap space to be much steeper, at least because it was the one that has raced more in the past 5-6 months? As well, would you really get out of some of the stocks where you think valuations are unjustified?
Oh, yes. That's where the froth normally tends to build up very soon. And both because of, illiquid stocks, both because, you get the go-go momentum coming in them. So when they correct, they suddenly will correct 20-30%. And when they go up, they obviously do go up 50% in just about a month or two, as quite a few have gone up. So I would be wary of substandard mid-caps at this point of time, which have run up substantially. So definitely,
can you name names? Can you name names where you're really uncomfortable?
I haven't really been tracking, the trashy ones. So one would want to go totally where one is comfortable with as an investor, because, if you are comfortable with a trashy sounding name, but it's actually turning around, stay invested, because for you, if something that's trashy for me, for you it might be a fundamental turnaround story, because I don't know the real story. So really wouldn't want to get into individual names, but they become obvious when you look at the fundamentals and you look at the publicly available data as to where one should be and where one shouldn't be.
All right, Sanjay, we'll leave it at that. Thanks for that much required caution. I'm sure the market has paid attention to it because we are sitting at the lowest point of trade. But we'll see you again next time. That's the word coming in from Quantum.